mind, in my head, this is where we all came from. The dreams we had, the love we shared, this is what we're waiting for. And in my mind, in my head, this is where we all came from. The dreams we had, the love we shared, this is what we're waiting for. In my mind, in my head, this is where we all come. In my mind, in my head, this is where we all come. In my mind, in my head, this is where we all came from. The dreams we had, the love we shared, this is what we're waiting for.
What is going on YouTube and X? It is I, Brendan from Market Makers. Guys, last video we did on Thursday, I published it on YouTube, I published it on X. I gave you a lot of very powerful information. We've been talking about the 7-year cycle heating back up in that last video. I gave you the potential bottoming date based on sequencing of the S&P, when that date will be, and a potential upcoming crash date. Highly suggest you watch that video because we're not going to go over all the same material in this video. We have a lot of updates to do. I have not been able to update you the last couple of days. I've been on a road trip. I now am ill as well. I have a fever, sore throat, chest cold. So I wanted to get this video out because I know a lot of people wanted to see what my thoughts were on what happened. Something else we talked about in this past Thursday's video was the 7-year cycle, was other aspects that could bring the market turmoil, volatility, really bring it back into the market. And we talked about war. Now, what's interesting, as you guys know, Israel just suffered its largest terror attack in history. People are calling it the Israeli 9/11, which is not true at all. Actually, if you adjusted the population of Israel, which is small country, 8 million people, smaller than the population of Florida, small country, 8 million people, if you adjust it to the size of the USA, it's the equivalent of them losing 20,000 people in a single terrorist attack. 20,000 people. As of right now, the last update I saw, over 1,100 to 1,200 people are confirmed dead. Several hundred of those people were young people attending a concert for peace. And when gunmen attacked the concert, they tried to flee the exits. Many were gunned down. A lot of this is on TV. A lot of this is on social media because of the day and age we live in, and because terrorist groups want to take credit for the carnage and violence and horror that they cause. And what's happened since then? What's happened is Israel declared war for the first time. The first time since the last war, 1973, which again in the 7-year cycle specifically related to bubbles in financial markets, that is when the S&P dropped 64%, the largest drop since 1929, the largest break in the market. And it happened on the 50-year anniversary of the completion of the first 7-year cycle. Guys, I mean, it gives you goosebumps, not to take away from the horror of that actual event. And I know a lot of people, we got some younger people that watch this, haven't been alive that long, haven't seen the Middle Eastern conflict. I have a lot of friends that served over in the Middle East from our last 20-year war that we had due to 9/11. But guys, just to put it in perspective, because specifically social media is such a dumpster fire and people always want to take sides on things. Just view it from this perspective. If you remove the countries, if you remove the political affiliations, the ethnicities, the religions, all that stuff, if you woke up one day knowing and turning on the news, knowing that your son, your daughter, your wife, your husband, your neighbor, a family member went to attend a music concert and found out 300 people were gunned down by men with machine guns at the music concert. Dozens, if not hundreds, were taken hostage. And again, that death toll now is over 1,100 people. You would view it for what it is, which is a terrorist attack. That's what it was. Terrorists attack soft targets, weakly defended targets. The same thing school shooters do, the same thing mall shooters do. This is something that happens over and over. It is a terror tactic done by an internationally recognized terrorist group. So when you're reading people's responses to things on social media, keep that in mind. There's a lot of legitimate questions that are going to come out of this. Who knew? Are the governments corrupt? Why did nobody know? Why did nobody alert anybody? All those are legitimate, but what you shouldn't do is take away from the sheer shock and horror of all these people finding out family members and friends were slaughtered. Again, including a dozen Americans so far and supposedly others taken hostage. A young German woman was stripped naked and beat to death and then paraded around on a Jeep while people were jumping up and down and cheering. That's why you have the conflict in the Middle East. And we have parades going on to support one side all over the world, especially in the UK, especially in America, and especially in Canada. And guys, don't conflate political causes with acts of terror. View them for what they are. That is my 2 cents on the matter. But let's get to the markets before I lose my voice. Guys, look at the 10-year. 10-year is dropping off. This should be super bullish for markets, right? Well, a couple of things are happening right now in the marketplace. There's a big flight to safety. CNBC had on Paul Tudor Jones. He's a big liberal investor, a billionaire, and he came on and said he doesn't like stocks right now. And I think that was kind of shocking to a lot of people that follow him. He says he likes gold and Bitcoin. Well, what is he betting on with gold and Bitcoin? He's betting on, and he says so himself, the idea this war could easily expand and people are underestimating the risk. The market's underestimating the risk. We had record high yields since the GFC. And guess what? People are buying bonds, they're buying treasuries, and you're seeing the yield go down. Now, we have an auction for the 30-year today at 1 o'clock Eastern. We have an auction for the 10-year tomorrow at 1 o'clock Eastern. We have the CPI tomorrow at 8:30 a.m. Eastern Time. Watch for short-term catalyst based on that number. Downside, upside, it could give you some sense of market direction. This video, we're going to focus on the targets of where I see assets going. And this may be the only video I do this week, especially if I lose my voice. So the next video will not be till Monday. But you can see the 10-year yield or the 10-year yield here dropping, right? And we're hovering right around 4.566%. Can this spike back up? Absolutely. We have a big supply demand issue going on. We added over almost $500 billion to the debt in just a period of 2 weeks. We're running over a $2 trillion, north of $2 trillion deficit. All that paper has to get monetized. All the billions and billions we're spending, whether it be foreign conflicts, whether it be stupid pet projects here at home, has to get monetized. They'll be putting that up for auction. And if those auctions go poorly, you will see the yields rise even in this semi-risk off environment, what a lot of investors are viewing as a highly dangerous environment. You're seeing this reflected in the DXY as well. Short-term DXY, let's look at this. You see the dollar selling off, but right now you're just at the 105.658, okay, on this retracement. If we want to take this from the impulse, you really fell to the 618 at 105.690, okay? So you're kind of in a basing process. If yields continue to fall because all of that government debt, people are buying it, billionaires, big funds. If foreign governments step in and want to buy it, then you could see the dollar weaken as well. But again, this is a liquidity suck. Understand what this is. If our debt's getting bought up, there's only X amount of dollars in the marketplace. They're either going to go to stocks or they're going to go to safe haven assets such as bonds and treasuries, okay? So it's a liquidity suck for the market, and you're seeing it in the price action in Bitcoin. Now, we shorted Bitcoin, or I posted a short for Bitcoin up here at 28,566 or 28,417 specifically. That's the fractal high here. And we got a nice drop. I talked about this in the last video. Here's my pattern. I talked about this a couple of videos ago, but here's my pattern for this trade. This is a 5.5% drop I got on this trade. And again, I posted a short right back here at 28K. And this again is over 1,200 points in profit right now. Why did I short here? You see the pink line? That's your 200. That's your 200. Okay. And in Bitcoin, we're struggling here and it's selling off. But notice what you have here. You have a higher low structure. still intact, guys. And we're going to look at this, how this reflects in the markets. Okay. This is your three rising valley pattern. We have a higher low structure still intact. And you could see Bitcoin, especially with a low print on the CPI. PPI came out today. Wholesale inflation was up spot 5%. It was predicted to be up spot 3. So it defeated the lower estimated prediction. Market didn't care. But Bitcoin is a great liquidity barometer for what's happening in the market, because this is considered by professional traders in Wall Street the riskiest of the risk. Now you're keeping the trend in place here for higher lows, but watch this. If you break this low, if you break this next pivot here, right at 25,983, then watch to come retest your 25.2. Okay. And you can find that out tomorrow based on the CPI, what happens in the marketplace. So this is where you're at with Bitcoin. You have to flip 28,566 moving to the upside to get those higher level targets. And then, of course, regain above 31K to really want to move up in that wave fashion. Because remember, this is your other fractal high up here. You have to take out 31,826. You would have to have a Bitcoin. Let's say you get a low CPI. You have your three higher lows here. You get a low CPI. Bitcoin comes up. You want to see this come up, take out 31,826, fly up to those highest level targets that I have based on my Fibonacci waves, which was 39K to 41K. If that doesn't happen, and you continue to see bonds sell off, you can continue to see money flow into other assets, debt-based assets, because of the risk environment in equities, then watch these pivots start to break. Because if these pivots start breaking down, you're going to get these lower level targets. Looking at this specifically here on the daily time frame, breaking down below 25,983, you want to watch your 25.2, and really the 1.618, the golden ratio, takes you down essentially to your fractal low at 25,387. Massive danger zone if you start losing that, right? And then you start seeing an expedited move down based on risk. This can all happen, guys. You need to understand how fluid the environment is. This is what that last video was based on. All the different components of what can happen in the marketplace. This isn't stuff that you can TA. This isn't stuff you can do fundamentals on. You can't TA whether, for instance, Israel declares war on Iran or vice versa. There's no TA process for that. So you have to understand the variables in the marketplace and the key levels of support and resistance you have to watch, and what's happening in the market mechanics. A lot of these market mechanics, short term at least, will be dictated tomorrow morning when that CPI number comes in. If it comes in hot, guys, you could see an overreaction to the market with the elevated risk profile we are currently trading under. So pay attention and watch that. Again, going back to our pattern here, I have those key levels already lined out for you, the 25.2, your 27,868, 28K with the 200 laying on top of it provides strong resistance. You have to flip it and go up, okay? Let's go ahead and look at oil. Oil, you would think this would keep spiking up with the conflict, but not yet. You did get a big move up. You got to sell off. You're trying to get a basing process around $84 here, 84.22. If you see this escalate, especially if it involves another country like Iran, which is also an oil producer, then you're going to see oil continue to rise. Oil, people, whenever you see predictions for $150, $200 oil, again, anything's possible. But one thing I do know is when a recession hits, you don't need as much energy. Okay, so that there's this variable. Commodity traders have to be extremely savvy with trading. They have to look at market cycles. They have to look at supply and demand continually. They have to look at geopolitical conflicts and politics as well. And so you're seeing this in oil. You saw a big spike up to 95, big sell off back down to 84. What's the next move? If you watch the news, you'll probably see what the next move is going to be. Okay. If the war expands, oil's going higher. If this comes to a quicker resolution, you could see oil start to base and the economy do what it's going to do, which is slowly at this juncture unwind. A lot of people making a big deal again about the jobs numbers that were added. The jobs numbers were largely part-time jobs. A lot of this right now in this country, in the United States of America, the largest amount of people holding two jobs ever in the country's history is right now. So a large portion of those jobs numbers were part-time jobs because of the cost of living, because of the expense of everything, because of inflation. Okay. So you have to understand that. And Lee, throw up our job chart. Guys, if you look at the red lines on this chart, this is when recessions hit. You were always at the lowest amount of unemployment before the recession hits. We got down to the peak cycle here at 3.4, and you're going to see the recession hit. That's when unemployment spikes. So when all these analysts on TV keep talking about how low unemployment is, I think it's at 3.8 right now. It only has one direction to go, and that is up. The economy, if you look over the last 12 recessions, the quarterly GDP is almost always positive going into the recession. I think the average was 2.6%. And then you have a huge drop off, an average of a 6 point swing to the downside when the recession actually hits. So you need to pay attention to these numbers and how it affects the marketplace because cycles repeat over and over again. Let's look at the DJI. This is the closest to a death cross. Here's your 50 moving average. Here's your 200. Remember, I've been tracking this for a couple of weeks now. I've been telling you, I don't think anybody else is talking about this relationship. Again, my view of the relationship of the Dow, 30 companies, each selected from different sectors of the S&P, and it seems to be unable to take out the 200. Do you see this? And what did I tell you? If the Dow cannot take out the 200, flip it and move up, you're going to see limited ability for the S&P to rise. The Dow has now tried 1, 2, 3 separate daily candles. Today's candle still being open, obviously, but it's getting rejected. It gets above it. It's getting rejected right on the 486 fib, 33,906, and keeps selling off. Your 50 is hard sloping down. Your 200's flat. This is how you get death crosses in the marketplace with an incoming recession, all but guaranteed, despite what you hear on the media. You will have a recession because we have the longest, strongest yield curve inversion in the history of the country, both in duration and in the actual inversion of the yield curve itself. The leading economic indicators absolutely cratered. I lost track now. I think we're on the 15th month of the negative leading economic indicators. Again, I don't know if that's a record for the leading economic indicators, but I think it's close to unprecedented. You're getting this recession, okay? That's what's going to happen. When the market realizes that with the elevated risk in the geopolitical theater, you're going to see this go down. Now, let's talk about what the markets could do on the upside. CPI print comes out. If the CPI print comes in low, which means the markets could want to rally. We look at our upside targets. Remember, we've been talking about this. We talked about it last video. S&P 4418. What's right there? The 50 moving average sloping down. Here's your 200. Okay. Again, this was my upside target I've been talking about with you guys. Gave you guys this target again based on sequencing. I also have this Wednesday, October 18th date, which could be a potential major downfall in the market, a potential, I don't want to say crash because that usually has a percentage tied to it, but a market crash, okay? A strong pivot in the marketplace. And after seeing what happened this past weekend, what popped off, you could see how this could play out. So we'll just see. This is just a sequencing. This is not a guarantee this will happen, but you have incoming death crosses in all of the markets. For the S&P to really avoid this kind of danger, it needs to get above 4418, hold up here and start moving up, taking out these previous these lower highs, okay? That's what you need to see happen. I don't see that happening in the marketplace. You got to get up to 4521, take out that first pivot. Looking at your second pivot, 4540, then obviously your 4609 over here. That's what the S&P has to do to rally into the end of the year. In this environment, I personally don't see that happening. As you guys know, my thesis for the whole year has been this is a bear market rally in the 7 years bubble cycle, this massive run up that we've had in these markets, and that's what I anticipate to happen. Is we will get to a level, we will make a top just like this. I mean, just look on your screen. Look how the double tops form here on your screen, and they break down. Okay, you see this in all the indices over and over, and we're going to do that at some level. level, and I think the top of that rally was most likely going to be 44.18 if we can even get up there. Start hitting the 50, make a double top structure, bring this back to reality of the risk level we're living in. The risk reward premium in the market is not pretty, which is why you're seeing billionaire investors come out and say they don't like stocks here. They don't like stocks. They're safer bets, cash alternatives like Dalio's talking about. And look at the supply you're getting dumped on these daily candles right here. You're at 43.61 on the S&P. Market's just trying to hang tight, see what happens in the CPI. CPI prints low. Watch that move to 44.18. Again, that was our upside target. You look at your MFI, trying to cross the median line, and then you look at your volume ratio, it's pretty flat, a little bit more selling versus buying, obviously, and you can see that here in the candles. Let's go ahead and look at the S&P from a channel perspective on the 3-day chart. 3-day chart, guys, when you're looking at the S&P, short at the S&P 45.92. Caught nearly 9% drop from members in our Discord. If you guys want to trade with us, come check out our Discord. You get all of our indicators for free, and your first month is free if you want to try out BingX, where you can trade all the myriad of cryptos, or if you want to try out SimpleFX, key sponsor to this platform, you can trade equities, commodities, Forex, and Bitcoin and a handful of cryptos. Check out SimpleFX. SimpleFX, guys, you get up to a $5,000 instant deposit bonus for your first deposit based on your deposit. No games, no rollovers. You don't have to earn it or complete tasks. Only available with our link, exclusively with our link. So guys, this is what we're looking at here on the 3-day chart. So I shared this. We talked about this on YouTube as well and shorted this on our Discord. Nice drop, 9% drop. We've been shorting this all along. Gave you guys a 43.36 trade. My last 2 trades on the S&P gained over 200 bars. And one of the hidden gems, Mark, one of our staff traders, a buddy of mine on our Discord, he, of course, put in the long at 42.04, and we're at 43.61. So he has to try to outdo me. I know that's what it is, but we've been killing the S&P movement. So highly suggest, if you are interested in trading or learning about TA principles, or being in a fantastic community, 12,000 people on our Discord, then come check out our Discord. All that information is in the video description. If you have problems, definitely message Lee in our Telegram. Let's look at this though from a simple perspective here of pulling down a fib. We got hung up here at the 486, 45.53, right? This lower level pivot here, 45.53, you're at 43.61. And again, look at where the 618 takes you to 4,400. Look at the top of the channel here, guys. You know, our 1618, again, is 44.18. You see this? The 50 laying right across it. From a channel perspective, just looking here at the 3-day chart, right? From a channel perspective, where's your 44.18? I mean, it's literally, it depends where you broke through it at, obviously, but you can come back into the channel, and it's also at the peak here of the 2 trend channels intersecting each other, 44.18. Could you just see this slowly try to inch up before it rolls over? 3-day chart, you can see the massive double top. This is nothing but a law of 3 pattern. Let's go ahead and put this on the daily, and we'll throw the 50 on here so you can see what I'm talking about. So here's your daily. Let's add the 50. 50, let's go ahead and put this on here. Adjust this. I trade with volume weighted, but let's go ahead and put this as simple moving averages, what all the algos look at. And you can see your 50, the green line. You see this? Here's your 50 up here, laying right on top of 44.18. So low CPI, that's where I think we're going to build some type of structure. Could take days, could be quick. You can see here how it takes days to build these massive double tops before you get the breakdowns in the market. But that's what I think is happening, guys. So let's go ahead and look at this on the NASDAQ. NASDAQ, as you can see, 1618, 15,208. We talked about the NASDAQ getting to the 15.2 level. How did I get this fib? I'll go ahead and show you if you want to do this at home. Also approaching near the top of our channel. Took this fractal high here. This is nothing but a W pattern, okay? And I'm starting to lose my voice. I'm going to try to wrap this up. But 15.2, 1618. And as you can see, we're at 15,191. Low CPI. See if you can get above this a little bit. But I'm looking for the NASDAQ to stay inside this channel. And again, basically basically follow the pathway, the path of least resistance with all the risk in the market, the S&P and everything, build a bearish structure like the NASDAQ likes to do. I mean, I know you guys are sick of me talking about double tops. It's such a stupid basic pattern. But when you zoom out and look at things, this is how you get massive trades in the market when you understand the direction of the market, when you understand the cycle of the market. These are massive trades to look at these double tops in the marketplace. So could we come up and do this and do this and do this? You're going to do this. I mean, this will be a law of three double top pattern, right? So it hurts to laugh. Law of three double top pattern, but this is something that you can see across all the indices. So pay attention to it. Let's zoom into Tesla. Tesla, the 786 remains strong resistance at 269. Told you to watch this level. My ideal Tesla trade went over that last video as well. Is up here at the 1618 at 306. If you can get there, low CPI, if the market's put on some type of rally, some type of very strong rally, or Tesla earnings just show something fantastic, you could see Tesla rally up to this level. If it does, this is an area I'll be shorting it in. Right here, I'm just watching. We have a lot of volatility in the marketplace. Let's look at Apple. Apple, again, the key level to hold is 169.94. You're at 178 right now. Again, I told you Apple could come up, make another lower high. You see it here. Here's your high. Here's your lower high. This could be another lower high. If Apple starts breaking down, watch Apple. It's 11%, one stock, 11% of the NASDAQ. One stock, Apple, has a greater market cap than all of the Russell 2000. Very key to watch that level. Your next key level of resistance up here is 185. Let's look at NVIDIA. 463.91, getting rejected right at my 618, which is 467.19. See that here in the price action. Watch this again. The next key level, 482, guys. Low CPI or NVIDIA wants to rally. Watch 482.79. Watch the confluence of the marketplaces to see what they're doing. Are they pumping? Are some rolling over? Look at the Russell, the small cap, 2,000 companies, broader measure of the economic strength of the country, underperforming, obviously, because our economy is actually quite weak. But watch the 42.79. See if you can take this out or if you get hung up here at 467. Key levels of support are beneath you, 454, 445, 424. Let's look at the gold. Gold is pumping. So gold's going to get a little bit trickier here, guys, when you have market dynamics such as conflict enter, okay? Now, you know my overall thesis, gold moving with the markets. Obviously, that is true, but gold, as you know, in conflict, just like Paul Tudor Jones was saying, safe haven asset, okay? This can play with the numbers some, so be very careful. And I say careful, I mean if you are shorting gold. I know traders on our Discord, just in the chats, were longing gold down here, and they got a nice move to 1876. Just be aware of that. You can see gold spike up if there's a lot of fear, a lot of risk in the market, because that is traditionally your risk off move from the marketplace, can be in gold, can be in debt. So that's what people are looking at. But I do think overall, you're still in the same trend where you're going to have gold capitulation with market capitulation, which we do not have yet. You have yet another rebound bounce. And guys, the area I like gold to see if we build a bearish structure remains 1895, 1900, the top of the channel. Let me zoom in some so you guys can see this. The top of the channel up here, also where my 618 is, okay? I want to see some candles come up, candles come down, and I'm just drawing a basic shape. Trading is not that difficult, guys. Market cycles, market movements, economics, patterns, predictions, forecasting, that's the difficulty, assessing your risk level. But in general, you're making double tops. Okay, there's W patterns in here, lots of different patterns, but in general, you're making massive double tops across everything. I would expect this to continue. Watch 1900 for gold. Be great if you can see something like this where you exit the channel, sell off, rebound to a lower high. Again, classic double top. And then this is something that's easily tradable with confluence of what the markets are doing. Looking at the 3-day chart on silver. Silver a little bit more flat. It's up spot 73% today. Again, key level for silver to hold is 19.91. You lose that. You start looking at your next pivot down here, which is about 1775. If silver starts to rally with gold, then watch the previous levels you came from, okay? The 618 at 24,899 has provided a lot of resistance for silver right in this quadrant. And more recently, your high of $26 if silver gets up off the ground and starts moving up with with gold. If not, again, silver could come up to this trend line, could come up to 23,111 and start making yet again another bearish structure if the marketplaces decide to go down with it. All right, guys, hope you enjoy the video. I'm assuming I'm going to be feeling better soon and not worse. So I will have that Monday video out for you guys. Give me a follow on X. I've been pretty active on X with charts, just talking to everybody and giving people some market updates as well. So follow us on X. I'll pin it in the comments. I'll talk to everybody soon. Take care, everybody.